Now let's talk about Reliance, right? So we have two gentlemen joining us to decode the numbers and how you should approach the stock. So Prakash, stay on. We also have Probal Sen, the energy analyst at ICICI Securities, and Balaji Subramanian, the vice president at IIFL Securities. Gentlemen, morning to all of you. Probal, let me start with you because, you know, the oil to chemicals business was on the weaker side. As expected, the macros have been weak. Given all of that, what was your reaction to the earnings and what do you see as the impact overall on the stock?
I think as far as OTC is concerned, what was very evident was that even the outlook that was presented by the management seemed a bit more cautious than it has been in the last couple of quarters. So more than the weakness in the numbers this quarter, my clear sense is that FY25 numbers will probably look a bit weaker than what I think earlier expectations were. So that is clearly the first takeaway from the way that the results came through. The second thing is that if you look at the upstream segment as well, with the segment hitting its peak production of close to 30 MMSCMD now, and the investment multiple, I presume, has gone over the threshold level at which the share of government in the profit petroleum starts to rise disproportionately. Now, this can reverse if they bring newer assets into play or newer asset development plays into play where higher capex is once again allowed. But once again, FY25 at least, the upstream share will also start to decline compared to FY24 because the government share will go up for this period. Thirdly, as far as retail is concerned, again, there was a slightly disappointing number, at least with respect to our and street estimates. So one will have to see how the momentum picks up. Geo remains the one bright spot with the tariff increases that have already been done. So on an overall basis, I think 25 consolidated earnings definitely look a tad weaker, and we have downgraded numbers by about 5 to 6% for 25 in our results note. And I think that is something that fairly sort of represents what has gone on and what we look at the macro going forward for the next 12 months.
Okay, so you're saying that FY25 will look weaker because of the management's guidance and you've gone ahead and downgraded your estimates. Balaji Subramanian is still with us, as well. Balaji, your thoughts on the numbers? You know, there is this EBITDA, there's expectation of an EBITDA up move because of the tariff hikes that, Probal was also talking about. And going ahead in Q2, there's expectation of stronger refining margins compared to Q1. But overall, what's your view on, the earnings and in terms of Geo particularly, what kind of growth are we looking at?
Good morning. Thanks for having me on the show. As far as Geo numbers were concerned, they were largely in line. But one can see that, two takeaways for me would be one is that ARPU has been flat for the last 3 quarters or so. And that is because, whatever higher usage is happening in terms of 5G, that is not showing up in the numbers because of 5G having unlimited data usage plans. And I think, unlike say Bharti, which has the factor of 2G conversion to 4G still going on. In Geo's case, since all customers are on 4G, the ARPU has kind of flatlined. That said, I think in that sense, against this backdrop, the tariff hike will come as a much needed ARPU and revenue booster. And we should see some bit of the revenue uptick from the tariff hikes to come in 2Q itself, and in 3Q we will have almost the full impact of the tariff hikes coming in, and that is when one can expect the ARPU to cross the 200 level. And the other thing in terms of these results were that the S&D expenses also seem to have climbed a fair bit. That is probably because of the higher competitive intensity that is happening in the marketplace, especially as far as subscriber acquisition and MNP is concerned. Now that we have Vodafone, who is strongly defending its turf, we may see that also persisting in the near term. But that said, I think the fairly healthy tariff increase should mean that the revenue boost from that should mostly offset any increase in the S&D costs.
So I heard you mention briefly a 200 rupee ARPU. I mean, for the last, I think, 10 quarters, the ARPUs have been between 175 and in this quarter, okay, we've gone to almost about 182, right? So for the rest of the fiscal, what are you looking at for the average revenue per user? And how much of it do you think is priced in? I mean, I didn't get your view on the stock per se.
See, I think almost all telecom stocks, including Reliance for that matter, prices in a significant, ARPU improvement. So my own ARPU estimate is around 201 for fiscal 25, but that also means that the 3Q and 4Q ARPU will be higher than 200 because we are also including the first quarter where the ARPU was just 182. So I would expect the ARPU to comfortably clear the 200 rupee mark by the second half of this fiscal, because if you see, even if we assume that out of the 20% odd tariff hikes that they have done, even if 15% is what gets retained, then we are looking at an ARPU of somewhere in the 207, 208 mark by 4Q of this year.
Okay, so by 4Q of this year, you're saying 207, 208 is what the average revenue per user could look like. Got it. Thanks a lot for that, Probal and Balaji. Thanks for joining in. Prakash.